Well, good morning and welcome to the bank. With me I've got John McDermott, who I'm sure you all know, Chief Economist and Assistant Governor. So the Reserve Bank today reduced the official cash rate to 2.25%. The outlook for global growth has deteriorated since the December monetary policy statement due to weaker growth in China, other emerging markets and Europe. Domestically, the dairy sector faces difficult challenges, but economic growth is expected to be supported by strong inward migration, tourism, construction activity, and accommodative monetary policy. The trade-weighted exchange rate is about 5% higher than projected in December. A decline would be appropriate given the weakness in export prices. House price inflation in Auckland has moderated in recent months, but house prices remain at high levels and additional housing supply is needed. Housing market pressures have been building in some other regions. There are many risks to the outlook. Internationally, these are to the downside and relate to the prospects for global growth. The main domestic risks relate to weakness in the dairy sector, the decline in inflation expectations, the possibility of continued high net immigration, and pressures in the housing market. While long-run inflation expectations are well anchored at 2%, there has been a material decline in a range of inflation expectations measures. This is a concern because it increases the risk that the decline in expectations becomes self-fulfilling and subdues future inflation outcomes. Headline inflation is expected to move higher over 2016, but take longer to reach the target range. Monetary policy will continue to be accommodative. Further policy easing may be required to ensure that future average inflation settles near the middle of the target range. We will continue to watch closely the emerging flow of economic data. So very happy to take your questions.
I mean, what you're seeing is quite remarkable growth in this economy, but it's being driven by a very strong supply response. Most of it, where labour market participation has been strong. We've been having new people arriving, Kiwis not leaving, and so the growth per person hasn't been as strong as it might have otherwise been. So it is often a labour supply dynamic that's very important in this story. The other thing with net migration is, the numbers are very large, but it has both a demand and supply element. So in previous cycles, the migration story has been very strong on creating demand for housing, all the durable goods that go in housing and all the transportation and so on. And it's tended to be more inflationary. And the current cycle is a bit different. The net migration story seems to be very neutral for monetary policy because there's a stronger supply response this time than in previous cycles. New Zealand's in a better place today than it would have been 3 or 4 years ago, when we had quite large deficits and projections of debt to GDP actually increasing. So the position's a little bit easier.